Why do most people lose money in crypto? I'll tell you. It's the same mistake that I made in my first cycle, chasing 100x lottery tickets. Everyone wants to find the next Shiba Inu or Pepe, that Hail Mary play that's gonna make them massive gains almost seemingly overnight. But this mindset is why 99% of people lose money in crypto. You must reframe your thinking. The crazy part about crypto is it's one of the only industries in the world where the little guy genuinely has a chance of beating the big whales and beating the big VCs. The whales, the VCs, the funds, they don't have time to crawl on chain, look for asymmetries, look for smaller arbitrages. They're focused on bigger deals, bigger things, and more highly liquid trades. So in today's video, I'm going to break down the strategy which is going to put you in the best position to make strong gains in crypto. The irony is, if you actually follow this strategy, you may actually end up doing 100x much more easily than if you are chasing a 100x in crypto. Before we get into things here, I want to let you know that I'm doing shorter, evergreen, alpha-packed videos on my brand new channel. Every single video is a banger, distilling the last 6 years of what I've learned into short, digestible packages which can consistently make you money in the market. And to celebrate the launch of the new channel, I'm going to be picking 5 people to give $200 to that subscribe to the new channel. So all you need to do is click the link in the description below and comment on this video that you've subscribed. Then I'm gonna go through, I'm gonna reply to 5 people for your X or your Instagram handle in 7 days time to give everyone enough time to participate, and I will send you over the money. So just to recap, subscribe to the channel, link in the description, comment on this video that you subscribed, and in 1 week after the upload date of this video, I'm going to be picking 5 winners to win $200 each. All right, so this video is going to be broken up into 4 parts. Firstly, I'm going to explain the mistake that most people make. Then I'm going to explain the reality of how you can actually make money in crypto. Then in part 3, I'm going to distill how you can make money. And in part 4, I'm going to summarize all of the above. So let's get into part 1, the mistake. Now, the mistake that I made in my first cycle was spraying and praying, hoping that I was going to find a moonshot play. I think at one point I was holding 20, 30, 40 altcoins in my portfolio, aping a bunch of low caps without any real idea what I was doing or without any real system or logic behind investing. And although at one point this logic made me huge gains, I ended up round tripping the majority of my gains because I had no idea what I was doing and I had my mindset around risk totally wrong. As the cycle progressed on and on, I was taking on more and more risk. I was taking on bigger bets. I was trying to chase moonshots. I wasn't going for 2 to 3x gains on coins and, being happy with that and recompounding. I was going for huge moonshots on plays like Luna and some DeFi stuff and in the Phantom ecosystem. And although I made money in the short term, I didn't keep the money. In crypto, it's only what you keep that matters, not what you make in terms of paper profits at any given moment in time. And therein lies the trap. Most people think making money in crypto is gambling. They try and find a moonshot play where they can make 50, 100x gains, and these numbers are thrown around on X and on YouTube, so you start to believe that you can hit those gains. And although it's certainly possible at times if you stick to your system, the likelihood is you're not going to hit a 50x. So instead of trying to chase it, focus on part 2, which is the reality. The truth is, wealth in crypto doesn't come from gambling or chasing moonshot plays. It comes from compounding. Do you know that if you hit just 3 5x plays in a row, you would have made a 125x overall? That's real math. That is the power of compounding in crypto. And that's way more realistic than hoping you'll stumble into the next 100x play. In my second cycle, I stopped obsessing over trying to hit a moonshot and my focus shifted to trying to compound, hitting a 2x, a 3x, compounding that into another 2x or another 3x. So instead of trying to hit moonshot plays and holding dozens and dozens of altcoins trying to find that gem, what you can do is you can get into higher conviction plays, actually lower risk plays, but stack multiple lower risk trades together to end up at your desired goal. This is a much more realistic approach to get the outcome that you want, as opposed to trying to hit a moonshot and risking your entire portfolio in the process. Your goal with every single trade is to make sure there's asymmetric upside. So the potential reward on that trade should be greater than the potential downside on that trade. Because sometimes you're gonna hit losses in the market, right? But if you make enough smaller bets and those bets all come with positive EV, so are asymmetric to the upside, overall, you're going to land up making money. Remember what I said earlier, the crazy part about crypto is it's one of the only industries in the world where the little guy genuinely has a chance of beating the big whales and beating the big VCs. There are asymmetries when news comes out but the market doesn't react. There's alpha in Telegram and Discord that the market isn't totally privy to that it wakes up to later. There's inefficiencies on the order books that allow you to arbitrage. The big whales and VCs, they aren't playing these games because they're trading with millions of dollars, in some cases billions of dollars. It just doesn't make sense and that can't scale for them. But if you have a portfolio of $500, $1,000, $10,000, $50,000, even $500,000, you can play these games. Actually, the less capital you have in the market, the better your odds are of finding a sustainable edge, because as you get more money in the market, it becomes harder and harder to gain an edge. For example, there are some coins that when I try and trade them, the liquidity is too small if you're using big size. Even in some cases, even 10, 20K can move the markets of a smaller cap. Whereas if you had $500, you would be able to enter and exit a smaller cap meme coin, for example, that you have some alpha on much more easily than a whale. And I've experienced this many times. I haven't been able to take advantage of opportunities, even though there was an opportunity to make money, there wasn't enough liquidity relative to the size that would be meaningful in my portfolio. So I skipped the trade or I skipped the opportunity. As I've made more money in the market, I've been forced to get into higher market cap, more liquid plays to get my multiples. If you're trading with less capital, it's actually a blessing in a way because more opportunities open up for you. More opportunities to, as I said before, compound those small wins. So this leads me to part 3. How can you do this? Well, firstly, instead of investing in 20, 30, 40 altcoins, go deep into 1 or 2 narratives that A, align with the market, and B, you go deep on and you commit to truly understanding. For example, a narrative like AI. There's lots of asymmetries. You could become an AI crypto expert that understands what products are the market leaders. You can be in all of the telegrams. You can be in the discords. You can hunt information. Now you can use AI to help you distill and automate that information flow. You're not trying to be across gaming and RWA and trading and everything. You're just distilling into one thing and you're becoming an expert at it. In 2021, I did this with DeFi. I became an expert at DeFi and that was my thing. Okay, there were all sorts of opportunities flying around, but I accepted that I would miss them because by concentrating my energy and my effort into one thing, I could become an expert at that one thing. And by becoming an expert at that one thing, I gained all of these hard skills, which later translated into other areas of crypto. For example, risk management, trading, understanding market psychology, understanding thinking in bets, position sizing, all of this stuff you're gonna still gain through going deep into one niche. So instead of spreading your attention too thin, focus on one thing and go really deep into it. Ultimately, that's gonna help you gain an edge. So the second thing is nailing the timing. So it's not just about the narrative, it's also about making sure that narrative and has actual catalysts that are going to positively impact the price. So where attention goes, liquidity flows. You should be focusing on ecosystems that have attention, because if they have attention, they're likely to garner liquidity. And when liquidity is flowing into an ecosystem or a narrative, it further skews the risk reward in your favor of that trade. So even if you don't get an opportune entry, it should make up enough of a buffer to skew it in your favor. But ideally, you nail not only the narrative, but also the timing with the flow of liquidity into that narrative. So one potential niche that you could look at is narrative trading. These are people that primarily are on-chain traders. So they may trade sometimes on centralized exchanges, but most of their effort is focused on-chain, and they will look at what narratives are starting to gain mindshare. You can use applications like Cookie, Kaito, and now ChatGPT and other LLMs to analyze, and you'll work out where attention is flowing. You'll look at liquidity flows, and you'll try and position and find smaller cap opportunities in those ecosystems. I think that is a genuine way to create an edge in the market. And then thirdly, I need you to make a slight mindset shift. Instead of trying to always make money, even though you're trying to chase opportunities, right, to compound, your default stance should be protecting capital. So only get into an opportunity if you think the odds are skewed severely in your favor. If something's on the fence, don't force the trade. And if something's off in a trade, make your default stance to protect capital and hold more stables as opposed to risking more in the market, because ultimately you need to stay in the game to win the game. Especially if you're going to execute the strategy of compounding small wins, you need to stay in the market to have enough liquidity so that when a new opportunity comes up, you can actually deploy. So this is a mixture of when the market's pumping, make sure you take enough profits. When things are looking shaky or when you get a bad vibe, making your default stance, trying to protect your capital instead of trying to make money. There's an amazing quote by Larry Williams: "In the pursuit of protecting capital, act fast, and in the pursuit of making money, act slow." Now, most people, their default stance is to do the opposite. If you see an opportunity to make money, people really act fast. Now, in a bull run, this can pay off, but I do think shifting that mindset to trying to protect capital and then having making money as the secondary priority actually ends up making you more money, because just by nature of staying in the game, you're going to expose yourself to more surface area of opportunities in the market. So even if you sat like purely in stablecoins and you waited for the right opportunities, okay, there might be times where you miss stuff, your strike rate would increase because you're not trying to force trades over and over again, and you'll have enough liquidity to get into those trades. So this leads me on to part 4, which is summarizing the above. Shift your mindset from spraying and praying and trying to hit these big trades to focusing on developing a system to compound small gains into a much bigger gain over time. Shift your mindset from trying to make money to trying to protect money and increase your surface area. As your surface area gets bigger, work out the niche and the system which can help you extract an edge in a market where there is so many asymmetries. Especially for people with less capital, crypto is actually a great market because it genuinely rewards those that work hard, that focus, and develop an edge for themselves. Developing an edge, it sounds like this wishy-washy thing, but really all it is a culmination of lots of trading, lots of hard work, focus, and consistency. And if you do those 4 things, you're already ahead of 99% of traders who frankly treat the crypto market as a complete gamble, whereas you will be locked in to treating the game with the respect that it deserves. If you do enjoy content like this, make sure to subscribe to the brand new channel in the description below. Remember, I'm going to be giving 5 people $200 that subscribe to that channel and comment on this video. If you enjoyed this video, for example, you'll love the content over there because I have many more short videos focusing on very specific aspects of crypto. I don't have the bandwidth, or I'm not able to cover on the main channel, which is obviously more market focused. So I'll see you over there for more videos like this. Hope you have a lovely rest of your day. As usual, peace out.